guys, what is up? Today I am basically going to be doing a bit of an overview on why market structure is important and why you guys need to take it into account to your trading. Yeah, I'm just going to be going over a little bit of overview of what I usually do for my market structure. I trade Forex and I trade futures. So for JPY, um, since it's a slower moving pair, I tend to start on a 5 minute, but right now I'm on the 1 hour because there's obvious structure that I don't want to ignore. So right now I'm gonna highlight to you the structure that makes this trend that looks obviously bullish, right? Because we're bullish, we're going up, ascending, right? Instead of descending, going down. So when you have your market structure, you have your high, and you always want to start from left. You always want to start from right to left. You never want to start from left to right, because when you start from right to left, it allows you to capture the current range and your current trend. Because when you start all the way back here, you're looking at the past. So it kind of trains your brain to identify and find setups in the now. So our current high right now for UJ is here, and our current low um, is here, right? So what's our previous high? Right there, and previous low right there. So structure is bullish. And I can keep going. I can keep writing down the highs and lows and go all the way back here, but all the way back here isn't important. We're only taking into account what's currently happening so we can actually find an actual trading setup in the now, in the current term. So we're on the 1 hour. So basically, the 1 hour on UJ is like the 4 hour. I'm gonna go on the 3 and 5 minute because that's usually where I take my entries because we know that the trend is bullish. Sometimes I go on the day, the daily. Right now, I'm just gonna stick to the lower time frames like here, and what I'm gonna do is I am going to highlight what I observed. So there actually is a high here that broke um, this high, so I'm actually gonna mark that up. And this is why I use multiple time frames, because you don't always see stuff that you see on the higher time frame. And this is why multiple time frames are considered a confirmation in my trading. And I don't know if it's in your guys' trading, but yeah, guys. So the first thing that I usually do is to help me identify current supply and demand and see what happened in the market. Like if the market came back and tapped into demand and tapped into a fair value gap, I usually use break of structure, and that lets me know where demand occurred before the market changed or when the market changed. So right here we have BOS, what I just wrote, right? Because right here the market was going down, and the market went from going down to shifting upward because price took out this high right here, causing a break of structure, and that's a change of the trend. And what happened was price came back down, and when price came back down, it filled in here in this demand, whatever was down here, didn't exactly tap into that gap here, and it went off, and it broke, and we have a new high. So let me see. Yeah. So when you have a new high, you always want to mark that up too, like that. And possibly we could have the market come back down and take out this gap here. But what helps me with that is I turn on the volume chart, and it's going to show you that, yep, it's going to show you where the most money went into the market. So you see the green volume on the bottom of the screen, right? You see that the highest point is right here. Since that's the highest point of current demand, I'm not really going to worry about this past demand, because that usually means the market has so much demand that it's going to continue to move upward. So I don't really necessarily have to trade and wait for this to come back down here. I can actually wait and expect price to actually continue breaking upwards like this, right? And I can wait for price to come back down and enter in a buy position right here. But that's not going to happen yet because I need to wait for an actual confirmation, which is the confirmation of price. Let me turn off the volume chart. I only use the volume charts for specific areas, for specific analysis. I don't use it for major trend analysis. I basically use it for various yeah, I use it when I zoom in like this, and then I turn the volume chart on, and then it shows me where specifically money came into the market, which was obviously the highest point, the highest tower. Yeah, just look at this as a big corporation city, and this is all the towers, right? These are all the towers, green and red, right? The highest one represents the biggest amount of money, the millionaires, the billionaires. So right now it's green. So that means the market, what's dominating it is demand. So I wouldn't be looking to sell. I would be looking to buy, obviously. And I wouldn't be looking for price to come back down here. It can. Now it can. It can come back down here. But I'm not expecting it because whenever I see demand like that, it usually means this. When a normal market goes up, down, but sometimes when there's such high demand, the market won't do that, and people will say, well, how come I missed my trade setups? It's because the market went straight up, a little bit down, straight up, a little bit down. You guys seen that, right? That's because the market has high demand. When the market has medium demand, you can expect the market to retrace and come back and fill in inefficient price action towards the middle 50%, right? But the market won't always do that. So you need to understand market structure so you can identify what it's doing, so you can actually find the setups that you guys want to trade. So right now, if UJ right now breaks this high that I just drew right now with that blue arrow right here, if it breaks this high, I can expect price. I can expect price to show me another demand zone and trade right here. And so once that happens, I'll actually have new market structure. When that happens, I'm gonna delete everything I just drew, and I'm gonna highlight this low here, this high over here, and this low, and this high. And I know it looks sloppy, but market structure isn't always clean and perfect like you guys see like this. In reality, the market moves kind of like that and this. It isn't always perfect. But what matters most is the structure. As long as there's a high breaking the previous one in an uptrend, then it doesn't matter. But yeah, so there's a big event on Wednesday too. So if you're trading USD, that's a good day to trade too. You never want to trade during the events. You always want to trade before the events themselves or after the events, because if you trade before the events, you'll find a setup that happens, and most of the time, the news will be pushing your trading to profit. Now, if you trade after events, that's good because when there's a major events in the economy that causes the market to go up dramatically or down dramatically, and when it does that, there's always some sort of retracement that happens that you can get in on. That's why they have supply and demand trading. Supply and demand, blah blah. It's created by economic factors that add money into this digital screen you're looking at, because this is just a representation of money coming in and out of markets, right? So, yeah, guys, that's pretty much all I do. So I'm gonna only buy this if it breaks this high right here where the blue arrow is, and if it doesn't, I'm gonna expect price to come down here to that gray box, and I'm gonna buy off there. And that's pretty much what I'm gonna do. I don't trade any more than twice, 1 to 3 times because of risk management. Because sometimes you can get aggressive and take too many trades, and that's actually needed. So that's why I trade like that. But yeah, guys, it's not really difficult. I can go ahead and I can look at UCAD, and I can do that too, and I can see if oh, sorry guys, I was trying to press something else. I thought this was this link over here. It was supposed to be some more lo-fi, but yeah. So that's pretty much how it works. That's all I do. So right now we're on UCAD. I'm not trading UCAD right now, so I'm not really gonna show you guys what I do. But I will show you this. So right now UCAD was in a downtrend, right? UCAD was in a downtrend because the market was going like this. It was going up, down, up, down. And what happened, guys? What happened? Market from here, look at where it's low. I'm gonna show you. You guys are gonna understand this. It's not hard. Just listen. Look at where the market is low. The lowest point we had was right here, right? We had this low, and then we went up, right? But when we came back down, it did not break this low. Instead, it came, it continued going up. So instead of price continuing going down, it continued going up. So when that happens, that usually means there's going to be a trend shift. And so what I'm expecting on UCAD is I'm waiting for price to break this high right here, and when it breaks this high, I'm going to be looking to trade. But if it doesn't break, actually no, yeah, I want it to break this high and this high actually, two breakout structures, because that's not really considered a breakout structure. Yeah, I know it broke the high a little bit, but what I'm looking for, what I trade, I want to see a dramatic break like that. And so when that happens, I'll break 2 of these highs, and then I can take a trade on UCAD. But I'm not looking at UCAD right now. I'm looking at let's see, USD and Australia are what's moving today. So that means that I'm going to be looking at gold, oil, and other pairs are just this is CAD. This is New Zealand JPY, and this is Swiss franc CAD. So Swiss franc JPY. So I'm not trading this now or today. I'm looking at these 4 setups. I'm not trading all 4 of them. I'm only looking at them to see what I can find. So right now I have some sell side liquidity on oil. Most people think that it would be buying oil because, yeah, what did oil do? Oil came down, and then oil went up, and then oil went down again, and then oil came up. And instead of oil going back down and taking out that low, instead it came here to this, to the bottom of this range, and then it broke to the upside. Now this doesn't necessarily mean you guys can trade oil and it's about to go up, right? We only have one break of structure. And on top of that, if we were actually buying this, guys, it would look like this. We would need to see price go like this. Break above this structure like it did just now, and wait. We're not buying yet. We need price to come back down and form some sort of consolidation and then go up again, because that confirms that the market actually is bullish, because then we have 4 highs and lows. We have one high here, we have one low here, and we have a previous low and a previous high, which is actually valid for a market structure shift, right? Because once we have all of this, then sorry, I wrote the wrong high. Ignore this one. You can still, that still counts, but this is the ones we want to pay attention to. This new high that's created, previous high, previous low, and now we have 4 in total, and now we can look for a demand zone towards the bottom of the range, right? Or towards the middle of the range, depending on how much volume we have in the market currently. So that's the only way I'm buying this, guys. I'm not going to buy oil right now. I'm only going to buy oil if it comes back down to, let's say, this gap that I'm drawing. I know it's kind of messy, this gap. And then from that gap, blue price comes here, takes off, takes out the next high, and then I'll buy oil. But for now, I'm looking to sell oil. So once oil breaks that sell side liquidity, I might actually just do it before then, yeah. I'm looking to sell oil down here, down to this area. And I may not even do that. I may just wait for a while to trade oil, because we're supposed to have earnings today, crude oil earnings, and that's around 4:30. So I'm not really going to probably be trading that. I'm probably going to trade gold. Gold, guys. Yeah, I'm probably going to trade gold, because gold is in a downtrend, but on the higher time frame, we're on the uptrend. I'm waiting for that breakout on the smaller time frame to confirm the higher time frame on gold, and that's pretty much what I'm doing. So when I see that confirm, it's going to just break to the upside like that, and then come back down and blah blah, like I showed you earlier in the video. So if this was helpful in any way, guys, just like, subscribe, all that bullshit. Feel free to message me, guys, and show me your charts, and just literally just ask me questions, because I've been doing this for 6 years, and then I love to share stuff I know about this. This is really fun to me. I only trade gold and oil for futures. Everything else I trade is literally Forex. I also trade Bitcoin on a separate platform. But yeah, guys, I hope you guys liked the video. Peace.